There is something really, really weird. If you were wondering why or what does it even mean for AMC to be sitting at $15 a share, well, there is something really, really bizarre with this stock. And we know, we know when we know. If you know, you know, if you know what I mean. What I'm trying to say is, right now, the share price action, the share price movement, it's on the downtrend, which is kind of bizarre, which is a lot bizarre because 6 months ago, literally, the share price was sitting between $35 and $50 a share. But the company back then was not in the better situation and financial position it is now. The company did not have all the bright future ahead of it. The market was not presenting all of these catalysts that have the potential of triggering the short squeeze once and for all. But for some reason, we have this dichotomy, we have this division, we have this segmentation between actually the underlying bottom line to trigger the short squeeze and the way the share price is acting. What I mean is, if there was a time for the short squeeze to actually start and shoot this price to $100, it wouldn't have been, by looking at the catalyst, it would have been happening 6 months ago. But now, all of these odds are stronger, way stronger. You look at interest rate hike, you look at what the Fed is going to do, you look at what Russia is doing with Ukraine, you look at the market and tech stocks price action for the last 3 months, you look at calls around the recession, etc., etc. Well, you look at all the moves the company as AMC has been doing lately. I mean, you kind of see what I'm going with it, right? Now, if you are doubting that there is still a strong possibility for this to do what it's supposed to do, let me clarify and give you my thoughts on what's going on. First off, the market as a whole has been shorted. People have been pulling money out of the stock market on fears of recession, on fears of uncertainty, because whenever there is uncertainty around any specific item, the market will tend to overreact. And by overreacting on the downtrend, it means we'll have the kind of stock market action we had for the last 2-3 months. Why? Because people, when they don't know what is coming, because I don't know what is coming, I would rather have my money close to me. I don't want the money invested, because your money invested means you're taking risk. But because you don't have visibility ahead of you, it doesn't give you comfort. And whenever there is no comfort, you take the money out. But that actually gives more wind for the short sellers to make money in the stock market, because the conditions are there for short to actually prevail in the market. So for the last 3 months, since January, short sellers have been piling $200 billion worth of short selling stocks in the market as a whole. But now that we have certainty around what the Federal Reserve is going to do to combat and to fight inflation, now that we know exactly that maybe we will not have that much recession because jobs are still, the job market is still very strong. People are still consuming. Remember, the US economy is made out of 2/3 of US consumption, meaning whenever you and I travel, buy stuff, work, it means the economy will likely continue to grow. Not as huge as it used to grow 2-3 years ago, the last 2 years, but it means there is still going to be growth. So that means people, now that they have ease of mind around all of these things, it means they can easily put that money back into the stock market. So by doing so, it triggers a buying pressure. That's why for the last 2-3 days, we've seen the market going up. Monday was 500 points, up. Tuesday, another 500 points. And today we are closing with maybe 300 points. So literally, it means that short sellers and market makers are getting in the midst of covering their short positions very aggressively, because if they don't do it now, the more people are going to still buy. Well, it's going to be difficult for them because they are facing bigger losses when they actually cover. And by covering, it adds again to this buying pressure. So I wouldn't be surprised if we continue to see the market going up in the next few weeks, because part of that will be triggered by the short sellers covering. But AMC is one of the highly shorted stock in the market currently. So whenever shorts cover, it wouldn't be an exception for AMC as well. What I'm trying to tell you is, on top of the market conditions that are prevailing here, we are also in a very good position because the short sellers will try to give you the impression that it's over. Remember, Citadel algorithm are pretty much working based on your emotions. Look at just the sentiment on AMC. Even though it is true, people are not selling. If you jump on Fidelity, you will see that people are still buying. The amount of buys against sell, it's still 3-1. 3 people buying for 1 people selling. All right. So how come this will continue to go down if we have 3 more people buying than sells? It's because they are still using the same tactics they were using so far to give you the impression that it's over. But when you zoom out and you look closely at what will trigger the short squeeze here. The conditions are way stronger now than they were 6 months ago when the stock was trading at $72 a share. So they doubled down, and that is why we have the utilization rate at 100% for almost a month now. All right, because they don't have any more shares to use. All right, so it's seemingly that we are getting closer and closer to a situation where even if all of these catalysts are not triggering the short squeeze, the short sellers are going to trigger it themselves, because this cannot continue to go over and over. At some point, they will have to cover, and that is what you need to focus on, because it is the bottom line in this play. It is the bottom line in this short squeeze strategy on AMC. It is. That's literally what we're trying to face. So it doesn't matter if it comes from the Fed increasing interest rates. It doesn't matter if it comes from the market going higher. It doesn't matter if it comes from the war in Russia. It doesn't matter if it comes from defaults coming from that. It doesn't matter from anywhere it's coming from. The thing is, there is so much pressure coming on them that it doesn't make sense that they don't cover. All right. So again, just a matter of time. I know it's long. I know we're tired. I know we want to move forward but it's coming.